Well, hello everybody. This is Jeff Miller coming to you from basically the last day of February 2016. Well, as all of you know, we've had a rough go of it these first couple of months. And basically this is a continuation of a correction in the marketplace, at least in my opinion, that started in May of last year. And this is really no different than what history tells us, although this one has been a little bit longer, and the reason for that is because the downturn in oil that basically started, it's been ongoing, but basically accelerated here in December. But a normal correction is a downturn in the market of anywhere between 10 and 20%. And we've had 20 of those going back to 1945. So basically in the last 70 years, we've had 20 corrections in the stock market. And again, that average downturn before it starts to find a bottom and go back up has been 14% historically. Well, guess what? We hit a 14% downturn on February 11th of this year. That's when the market was down 14% since May. Ever since then, we've been on a steady increase in the stock market. So it's finding itself at its bottom and it's moving on up. Now, I can't guarantee that that's going to continue, and I'm not trying to paint a rosy picture up here because many of you have felt some anxieties with the fact that your account value potentially has been going down. But it is, historically speaking, a positive thing in the market. There are some headwinds out there. We've got kind of a global downturn in economies in certain areas in Europe and in China, which will have somewhat of an effect on our country. And so I'm not talking about a stock market that's going to rocket back up and get back to highs that we've seen in the past. But I do feel like the U.S. economy is pretty strong. It's growing at a very slow pace due to some of these other headwinds, but we don't see any type of weakness in any major sector in the economy, be it housing, be it retail sales, durable good orders, all the major metrics that economists look at when determining the strength of the economy. We really don't see any weaknesses in those areas. And so therefore, I'm cautiously optimistic that we found our bottom and we'll move up, but only time will tell. We've been absent a little bit from these videos, primarily because of time constraints and work and things of other things like that. But we are coming to you with some new videos and some people I think you'll be interested in hearing from here in the next 30 to 45 days. And again, if you have any thoughts or any questions or anything that you want to discuss, please feel free to give us a call. As always, we appreciate your loyalty and we appreciate your friendship.